In the rapidly evolving landscape of digital transactions, software companies are increasingly integrating payment solutions to offer comprehensive services to their merchants. Among these, automated clearinghouse ACH Payment Processing stands as a critical component. This video aims to demystify ACH Payment Processing, highlighting its significance and how it can be a game changer for software companies and enhancing their value proposition and extending customer lifetime value. Let's start by simplifying the complex. Understanding the intricacies of ACH payments can be overwhelming. This video is crafted to empower software companies with clarity and confidence, simplifying a complex topic. By incorporating ACH processing into their integrated payment solutions, companies can confidently offer a more robust, customer-friendly service, contributing positively to their revenue and enterprise value. What is ACH payment processing? ACH payment processing refers to the electronic transfer of funds between bank accounts in the US, governed by the National Automated Clearinghouse Association, or NACHA. It's widely used for various types of transactions, including B2B purchases, peer-to-peer, P2P payments, direct deposits, and online bill payments. So how does each processing work? There are two main types of ACH payments, ACH debit and ACH credit. In an ACH debit transaction, funds are pulled from an account, example for bill payments, while in an ACH credit, funds are pushed into an account, for example, disbursements. ACH payments are often confused with electronic funds transfers, EFTs, eChecks, and wire transfers. While ACH falls under the EFT umbrella, it's distinct from eChecks and wire transfers. eChecks are digital checks processed through ACH for one-time payments, whereas wire transfers involve direct bank-to-bank transfers, often used for international transactions and typically having higher costs. Why is ACH processing crucial for software companies and their merchants? For software companies, diversification of payment options, including ACH, broadens the array of payment methods, ensuring no potential revenue is lost from customers preferring this mode. Cost effectiveness. ACH transactions generally incur lower fees compared to credit card processing, translating to cost savings. Security and compliance. ACH provides a secure transaction environment, adhering to NACHA regulations, thus bolstering trust among users. For merchants, customer convenience. Offering ACH payments options caters to a wider customer base, particularly those who prefer direct bank transfers. Lower transaction costs. Merchants benefit from the reduced cost associated with ACH processing, optimizing their profitability. Recurring payments. ACH is ideal for subscriptions and regular billing, simplifying the payment process for both merchants and customers. Here are the pros and cons of ACH processing. Pros. Reduced processing fees. Compared to other payment methods, ACH offers significantly lower fees. Ideal for high-value transactions. Due to its cost structure, it is more suitable for large transactions. Enhanced security. With strict compliance requirements, ACH provides a secure transaction channel. Cons. Longer processing times. ACH transactions may take several days to settle. Return rates and risks. ACH faces issues like insufficient funds or incorrect account details, leading to potential returns and compliance challenges. Managing ACH risks. To mitigate ACH risks, software companies should ensure compliance, adhere strictly to NACHA guidelines to minimize transactional risks, opt for advanced fraud protection, partner with providers offering robust security measures, educate merchants, guide merchants on best practices, especially regarding high-value transactions. In conclusion, the value of ACH processing in your embedded payment strategy is undeniable. Incorporating ACH payment processing is not just a feature addition, it's a strategic move for software companies. It presents an opportunity to offer a more rounded payment solution, addressing the diverse needs of merchants and their customers. By leveraging ACH, companies can enhance their market competitiveness, foster customer loyalty, and achieve sustainable growth. Remember, in the world of integrated payments, overlooking ACH could mean missing out on a key component of success. For more tips and insights to elevate your payment strategy, visit us at nex.io.